This past Friday in our stock talk, we got into a conversation about swing trading, and Mark and Paul kind of took it over. And Paul made an interesting statement. He made the statement of why would anybody invest in Nvidia when they could invest in Coke or GE? And I thought, what? What is he talking about? Because I know Coke grows its revenues and its earnings by about 5-6% a year, where Nvidia doubles its revenues and has been on a storm. But why did he say that? I asked him, why did you say that? And I want you to see what he said. And then he's going to talk about another company that I thought was a dead horse. It's called GE. Watch this and let's learn from it. Let's you and I learn from it, and then I'll come back and we'll see what we want to do about it.
Actually, I would have got in right here.
Okay.
Well, I have a trading guideline. My trading guideline says I want to be at least one candle above the short-term 9. Okay. I also have a trading guideline that says I want to be positive on my MACD, which I was not here. See, we were at
right.
But the next day it went over. So I was positive on my MACD. I was positive on all my oscillators are green, and I'm above the 9. Okay, and then you just write it, and it never had a full candle close below the 9. Okay, we came close here on the MACD, where you could have gotten out if you wanted to, but you're still above the 9, technically speaking. You didn't get closed out, and you'd still be in. So it just depends how much risk you want to put to it. If you followed it to a T, like. You'd still be in it.
Today, Mark and I were chatting during the Zoom call, and I mentioned, look at GEV. That's General Electric Healthcare. Well, not healthcare. It's another sector within General Electric. And when I started talking, I said, look at this Bollinger Band. It's just widening, and there's so much strength here. I said, I'm going to buy a little bit. What the hell? Now, this was what, it was 3 o'clock when we had our call. Now, will this go down?
11:30.
11:30. Will it go down? Maybe. But look how much support. There's 2 candles right over the 9. I said, if it bounces at the 9, okay. But there's so much buying, and this MACD just kicked right up. The Scholastic's up. There's so much strength in this. I'm saying there's very little chance I'll be out of it if it starts twisting. So it's easy peasy.
Okay, so let's see what we can learn about Nvidia by looking at Nvidia's chart. Now, this is a weekly chart, and I like weekly charts because I'm more of a long-term investor, but I think I can use the same indicators to come to similar conclusions. Like Coca-Cola, Nvidia ran up on its 9-day moving average. This down here is its 200-day, and this its 50. So like Coca-Cola, it was in a good position, and you can see that all the indicators, this is the trend direction. Nvidia is going up. We have the MACD in a positive position. We have the relative strength in a neutral position, but we move up. And then Nvidia closes down below the 7-day. And here you see the relative strength. The blue line drops below, so that would be a signal to get out. Would that be a good time to get out? Yes. If we waited a few more days, we could see that the trend was going down as well, and then it was confirmed when the MACD crossed over again. So that would have gotten us out. Where would we have gotten back in? I would guess somewhere around here. As the MACD again went positive, as the Scholastic was positive, we'd get back in. And then when would we have gotten out? Somewhere probably around right there. Would that have been a good thing? Yeah. Making a decision now, we have 2 indicators that are negative. We have the MACD that is saying get out. We have the trend direction saying get out. So what they are saying is let's use technology or technical analysis to tell us when to be in good stocks. So with that in mind, I went and said, okay, let me look at the top stocks that I have that I'm working on, and let's see which ones I want to be in. And I want to go to the first one. I want to go to Marvel. Marvel is a semiconductor company, and as you can see, it's basically been trading sideways ever since the 1st of January. And now it's taken, look at its indicators. Here we have a very strong move up. In the scholastic, we have the MACD starting to break, and we have the trend starting. So this is telling me that Marvel is going to probably come back and reach its 52-week high in the near future. Can we confirm that with some other? Let's look at Modine. Modine is the air conditioning company. This is the company that has been putting air conditioners in data centers. And again, it climbed well, just like Coca-Cola. It stayed above the 9-day moving average. Then it dropped below. And as it dropped below, we see the scholastic turned, as did the MACD, as did the momentum. We then come here and we see the momentum starts to cross up. The MACD starts to cross up. We don't really get a confirmation on the MACD until today or last Friday, last week. And you can see now all the indicators on Modine are pointing straight up. And Modine will hit probably a new 52-week high. I had one other stock I wanted to show you, and that's Now, ServiceNow. Let's look at it. I got out of ServiceNow because I didn't know how the software companies are going to fare against AI. And as I got out, I was smart to get out because it did drop. It actually dropped below the 52. It dropped below the 9-day. And then here it came up above the 9-day and never really has closed below the 9-day. And we have gotten just this last week, some very strong indicators that ServiceNow is going to find a new high. This is its 52-week high now, and it's approaching that Bowler band, and we're probably going to see some new highs there. Here we have the trend line, trend direction turning to go up. We have the relative strength going up, and we have the MACD. We have 3 green lights that are saying ServiceNow is where we want to put our money at this time. Now, let's use this to our advantage when we should get out. I've been getting some comments about what about Supermicro Computer. The market has turned on it, and here we can see that it turned on it. See here, the market in the MACD turned all the way back on April the 15th. It was confirmed then in the RSI on April the 29th, and then it was confirmed in the trend direction on July the 29th. And you can see our numbers are just not looking good. So what do we do on this? Well, I would say we watch it. I'm out of it. I got out of it back here. And as it crossed the 9-day and stayed below the 9-day, if it comes back above the 50, if it comes back above the 9, and we see the MACD turn positive, and it looks like we may get a relative strength number that would be above 50, and that would be a positive sign, but our trend line is still down. So what I'm going to do on my cheat sheet, you see I have now a trend signal. And every week I will go and I will re-rate these stocks based on those 3 signals that I'm getting from technology. As you can see, I'm rating them 1 to 5. Apple's a 4, IBM's a 5, Meta's a 5, and Marvel's a 5. Or Meta's a 4 and Marvel's a 5. But you can see some others are 1s. Here's ARM, a 1. ASML, a 1. I don't like that. But this is something I'm going to add to my cheat sheet. And my cheat sheet is available to all the members of our tribe who pay the platinum level. That's $60 a month. Right now, we want to introduce you to this. We want to convince you we have the best product out here for choosing stocks and making money in the stock market. We know that these stocks are going to be positive. Again, Marvel is in 2025 is showing a 3% growth, then followed by a 71% growth in earnings, then followed by a 36. ServiceNow is 20, 22, and 17. But Coca-Cola is growing their earnings 6%, 6%, and 7. But you saw the market has moved to certainty. They know what Coca-Cola is. They know what GE is. And that GE is not medical care. That is an electric division that is using turbines and natural gas to generate electricity. And that's why it went up like it did. I am going to investigate it further because to me, that is almost a part of AI because it's going to be so important that these data centers have inexpensive electricity because data centers are going to do the same thing that storage units have done. Much as every empty building in your neighborhood has turned into a storage center, and that's understandable, as the baby boomers collected all their stuff as they made more money and then are downsizing, they need a place to put that stuff. So that's why storage units are growing. And you can take the same analogy and say those buildings that the Walgreens that are closing are going to turn into data centers, and those data centers are going to need electricity, and that's why GEV, I believe it is. Yeah, and that's why GEV is growing the way it is. Let me just show you quickly. Here it is. This is GEV. It just started back in April. It was spun off from GE. And as you can see, as Paul was saying, it burst up above the Bollinger Band, and its relative strength is extremely high. And we don't have enough of a history to put any kind of 50-day or even, let me change it to daily and see if we pick up some daily averages. Yeah, there's your 9-day, your 50-day, but we don't have a 200-day on it. This is something I'm going to look in further, and I'll be reporting on it on our Stock Talks on Fridays. Won't have one today, this Friday, because I'm meeting with Goldman Sachs. Those of you in the tribe know what that's all about. But you can see here it's got a strong trend up. It's got a strong MACD. In fact, the MACD has gone off the chart. And then it's got a strong relative strength. I'll give you more information on this in the future. But I think the message I want to deliver here is I'm changing. I learned, my tribe taught me something about relative strength, about trend lines, and about MACD and how they use them in swing trading and how I can use it in long-term investing. Talk to you again tomorrow more about this.